me bring you in as well. Asian Paints, of course, the numbers were extremely strong. I wonder whether you've bought Asian Paints on the dips. Is it still a buy? Because the cycle clearly seems to be turning. There's good strength on volumes and there's good strength in the EBITDA number as well. Gross margins also getting better.
Yeah, good afternoon, and thank you for having me on your show. So I haven't looked at the Asian Paints numbers because I was just kind of connecting with you, so I cannot comment immediately. But I think obviously the market has seen the numbers in positive light, and maybe the worst is over for the paint industry, and this amount of stability has come back. The competitive intensity has got absorbed, and now I think all the players are able to grow based on their respective strengths and based on their respective product profile and their various strategies. And Asian Paints continues to remain the market leader over there. And now I think in terms of view of returns, we can only expect returns which are in line with the growth in the profits, because I think expansion of P multiple, that is not something which will happen considering the competitive intensity. At the same time, I think that kind of the worst is over. So I would say that you could expect returns which are in line with the growth in the profits, which could be in the kind of mid double-digit kind of growth rate, 14-15% type of growth rate, which is possible. But margins keep on fluctuating for the paint industry because it is raw material intensive. And sometimes there's a lag between cost increases and passing on the cost increases. Sometimes they get the benefit where the costs come down much later, the raw material prices have already come down. But I think that in the past, Asian Paints was able to take advantage of the cost reduction and not pass it on completely. But now I think because of competition, that kind of a comfort may not be there. So I would say that it's a decent kind of investment. No point selling out at this point of time. But I would say from a purchase and from buying point of view, I would feel there are better ideas in the market and the building material industry only.
Interesting. Deepan, I'm going to have to pause this conversation very quickly. Unfortunately, you need to cut across the M&M, the other one. That stock is locked on a 20% upper circuit on the back of this news. We'll come to that. But Deepan, slightly more longer term. How should one look at the auto pack? How should one play it? How are you viewing opportunities within that pack from a risk-reward perspective?
So first of all, I think the SML acquisition was very positive for M&M. It was strategic and it has been greatly value accretive. The performance and the stock price has only been doing much better since M&M came into the ownership position less than a year ago or so. And this particular rationalization or consolidation is very positive. And I think that the commercial vehicle industry itself is doing very well, has got good potential from what we can see from Tata CV as well as Ashok Leyland. So from that point of view, I think this particular kind of corporate action makes complete sense. And even at these levels, I think SML one should consider, maybe not right now because it's flared up the way it has, but at some point of time when the correction sets in, or we see better performance, valuations are reasonable, you could consider the stock. Having said that, I think we remain positive on the auto industry. But end of the day, I think the kind of volume growth which we have seen, we need to temper our expectation over there, because eventually I think base effect will catch up for the industry, and raw material cost increases also will start to impact the profit margins. So although we remain positive for the longer term in the industry, I think next 3-4 quarters you may be soft, and you need to kind of pair expectations that next 2-3 quarters may not be as great as the last 4-5 quarters have been. But look, the long-term trajectory is great. And maybe at corrections, one could look at adding, if you're underweight auto, look at adding more auto shares. I think across the board, companies have done well over there, whether it's Bajaj Auto or Eicher Motors or Suzuki, TVS Suzuki or Maruti. M&M also been a star performer. So I think the entire industry done pretty well. No, you cannot pick out one against the other. It's just that the industry has done so well that you kind of wonder that when is the next kind of challenge going to come for the companies over there.
Holding Mahindra CV into SML Mahindra, and that move has led to that 20% spike in the stock price. Deepan positive as he was describing it, but said let's let's wait. Of course, locked in upper circuit, maybe wait. Hopefully buy on dips. Essentially, that's, I think, the message. What we'll do is slip into a very short break. Come back with more. Stay with us. Of HDFC Securities this afternoon, it's a very decent uptick, 290 odd points now on the Nifty. Nagaraj, how are you looking at it?
Hi, good afternoon, Harsh.
Good
Yes,
afternoon.
Nifty has witnessed a fantastic up move in the last 3-4 sessions, and two back-to-back opening upside gaps in the last 4 sessions, indicating the strength of an uptrend. And the another evidence is that Nifty has broken above the immediate hurdles of around 24,000, 24,200 so far, and trading higher. The overall stage is set for the bulls to make a breakout. I'm expecting more upside towards 24,600 levels in the short period of time.
Okay. Deepan, if I can come to you with regard to results, just so many coming our way and so many moves. Well, what's really standing out to you in a market like this in terms of numbers?
Oh, that's a very broad-ended question.
Absolutely.
No, I think industry by industry, if you go, there were certain very good surprises. Like in software, Coforge came with a very good set of numbers, and Street rewarded it exactly. The management has been anyway speaking very positive about their performance. The acquisition which they have done has worked out very well for them. And somehow I think they're able to manage the disruption caused by AI far better than some of the other companies. So then when it goes to the banking industry, I thought that IDFC First Bank and AU Small Finance Bank came with very good set of numbers. I think they've been able to manage to grow the loan book and a lot of other parameters far better than the rest of the industry. Then if you go to the next industry, like say maybe which industry comes to mind?
Sorry, I'm probably, I've pushed the wrong button, but trying to get a sense on IT itself. How should, therefore, now that Coforge has run up the way it has, would you probably go out and buy Coforge? Would it be some of the mid caps you prefer? Would it be the large caps? What's the preference with regard to IT?
I think IT is going to become very selective, and companies like Coforge, Persistent Systems, Happiest Mind, Oracle, I think they're the ones which may be the winners over there. And large cap IT, I think, is still stumbling, is not able to find its right position within this AI world, and that may continue for some more time. So bearish on the entire sector per se, positive on only a few companies, and maybe outliers could be sector-specific giants, like say Tata Elxsi or KPIT, which have got very sector-specific kind of expertise. They may be able to do well, although their performance also last 2-3 quarters have been very disappointing. But I think that they will be able to manage eventually. Having said that, all of these companies, we and our clients will be invested as a measure of disclosure.
Okay, Dipan, thank you so much for giving your time. I know, it's been a crammed show, frankly, but thanks so much for coming in and giving us that perspective.
Thank you.
Okay.